Folks, welcome to Market Technical Analysis by InTheMoneyStocks.com, your leader in pure technical analysis, avoiding all that Wall Street hype. Today, Thursday, July 24th, 2008. Well, the great thing about today, folks, is that we expected it. And this is the beauty of being a trader or being a swing trader in the market. You don't have to worry about being long for long stretches of the market or being short. And again, in yesterday's video, we actually altered our opinion after seeing tons of proprietary and just normal technical indicators pointing to a major overbought area in the markets. And that's exactly what we had yesterday, and to a T, the proprietary indicators signaled the sell-off to the day as we saw a dump in the market. So again, InTheMoneyStocks.com calling for a sell yesterday, adjusting their consolidation move to a sell and a drop in the markets, and we saw exactly that today. Now we're going to go over the charts we looked at yesterday, what told us this was it. Obviously, we can't go over all the proprietary indicators, but I will say come join the webinar on Saturday, July 26th, this coming Saturday, 1 p.m. Eastern Time, and you will learn a lot of this stuff. We teach it in this webinar that we're going to be doing. Sign up on InTheMoneyStocks.com. It's a great way to learn. It will unbelievably open your eyes to some amazing techniques and technical proprietary stuff that we've discovered. So I do encourage you to come sign up for this. Will be definitely worth it. But either way, what we're looking here at the market, just taking a general view, it was almost a no-brainer yesterday. Once you continue to push up a little bit, you saw the market move from the highs yesterday and push down, creating somewhat of a topping tail in the markets on various indexes like the S&P and the Dow and the NASDAQ. And it was just almost a no-brainer that the market was going to fall. You take into account that and look at the chart of oil at major support. You looked at the XLF, which is the financials, and it was at major resistance. And we talked about the keys of this market being oil, the financials, and the dollar, and all were either at supports or resistance. Oil at support, therefore it bounces, causing the market to come down. XLF, the financials, at major resistance, obviously needs to pull back. We saw that today. That caused the markets to move down. And the dollar basically staying in approximately the same range, almost a non-event today in reality. So today we saw the Dow down 283 points, or 2.5%. The NASDAQ was down about 46 points, or 2%. And the S&P was down 30 points, or 2.3%. Now we're going to go over the charts again, but I want to just focus in on the intraday chart of the ES futures. And again, this is the ESU8 September 08 E-Mini S&P 500 contract. And we always like to use this because it gives us the best angle and view of the overall market conditions. Now today we saw the markets early on trending possibly to the upside. There was a little bit of positive stuff in the markets going on here, and it really took off right around the open in the markets. You see us trading flat right into the open here. Here's 9:30, and then you see a push up to 10 o'clock. Now 10 o'clock unveiled the new the housing sales basically for the month of last month anyways. And what you saw there is that was just a little bit of a trigger that needed the market to take some profits. All right, you add into that, you had some WAMU, some Washington Mutual negative news out there, or rumors out there. We all know the financials have just been on a ripping tear lately, and they were due for a pullback, and the market just started to sell. And you can see, folks, there's not much to this chart. I mean, it's not a lot of major patterns forming here. Anything more than just on a daily major overbought nature. That was what triggered the sell-off today, any way you cut it. But the nice thing about this market, now we knew this sell-off was going to happen. Obviously, we talked about it in yesterday's video. You can go watch yesterday's video for the keys to that. But the key here, folks, again, is that it was just needed. You need this pullback in the market, and you needed a pretty strong one at this point. The longer the advance in the market comes off the lows, the harder the pullback needs to be. And you can really look for a 50% retrace here, in our opinion. All right, and we're going to go to the daily chart, and you can kind of see that. But what I want to really go to is the SPY. SPY daily. And again, here's where we thought the market was approximately ready to go long right here. Right up in this area, you needed to start to see consolidation. And you got the market to tick up a little more, but ultimately you saw this little bit of a tail up in this range, and that's telling you that the market's overbought. One aspect, anyways, telling you it's overbought. There were multiple other aspects telling you that the market needed to sell off, and sell off relatively hard. And the reason being is when you have an extension move on any chart like this off the bottoms are obviously, when you have a drop in the markets like this, there's something wrong in this market. This market is going straight down, virtually straight down, with very little bounces up. Now that's telling you there's something fundamentally wrong in the market. Alright, it could be a stocks chart, either way. The point is, when you get back to that 20 moving average on such a nice move, you're going to pull back. Remember, we always talk about first hit of the 20 approximately being a nice pullback area, and that's exactly what you're seeing here. And today was a solid down day, very, very nice down day across the board, really pulling us back right to that 20 moving average and a little bit below. Now, the SPY, here's the key, guys. Now, everyone's going to want to know, well, how low did we go? Yesterday, in yesterday's video, we highlighted the 20 moving average as being the first point, and we also said look for this to be the second point right here possible. Now, in addition, if you want to even go even further, look at right at this range to be the third area, right in this range to be the 50% to 0.618 retrace on the Fibonacci level here, and that could be where we're heading. Now, we really want to see multiple days of pullbacks. You just don't want to see one pullback and then us race to the upside again. What we really like to see is a couple days in a row, and tomorrow even a pause day, a flattish day to slightly lower would be fine in the markets, but that at least would give us continued sell-off and negative psychological levels in this market, which is what we need to see. Okay, that's no doubt about what we have to see in this market is a little bit of perception, and we started to get that today. Remember how bullish everyone got all of a sudden off on the financials when they bounced? And then we can look at the XLF. The XLF's a great indicator here. Look at this extension move on the XLF. Not only did we clear right through the 20 moving average, you had one pause day where we closed right on it and then we just continued up, but you hit the 50 moving average, and I don't know if you guys can see it, it's in blue so it may be hard to see it, but I'll draw it in. This is the 50 moving average. You pierced it yesterday, and then that was the sell indicator right there, and that's another one of the main keys why we saw this market selling off today and why we were dead on. So again, notice the sell-off on the XLF. It was led by WAMU, Washington Mutual, down about 20% or so. Pretty big drop, 25% on WAMU. But there's a lot of issues out there. Things are not done. I mean, people, it's so interesting because psychological levels are a great indicator for this market. You guys know I'm a big fan of using that. But you saw at the bottom down here on the financials, major panic in the market. And it was the greatest buying opportunity you ever saw. Now, up here, you saw major euphoria. Everything's going to be all right. Buy financials, financials, financials. And that was the top of the near-term move. And if you could just somehow gauge those psychological indicators, and we do, obviously. We look to gauge those in a number of ways through calculations and other things. But just watching the media and discussing, just noticing how the media is portraying it and noticing how your neighbor's portraying it, you can get a general sense. Either way, beautiful move down. And this is one of the charts we highlighted yesterday as needing a sell-off. And sure enough, that led the way today. SKF was another one we highlighted yesterday. And let me put in the 200 moving average, because this is one of the big ones why we believed that the market was due for a bounce. This is a 100-point fall from here to the lows of yesterday in the SKF. It was $211, fell to $111 in a matter of 7 to 8 trading days. Now that is unbelievable to see that type of fall. In addition, what you had was a hit of the 200 moving average, which is the monster of all moving averages. Alright, so number one, you're hitting that major level. Number two, you're selling off almost 50% here. You're going to get a bounce off that level. And in tune with that, anyone that bought on that 200 moving average right around 111 to 112 yesterday, or even buying at the open today, which was at 115 and change, you got a major move up as it moved back to 130. Notice where it went. Alright, here's the 50 moving average right here. And where did it go? Right to the 50 moving average on the upside. So you had a hit of the 200, a retrace back to the 50. Now, is it possible this goes higher? Yes, it's possible. Very possible. I mean, the financials aren't out of the woods by any stretch. Is it as high a percentage trade as it was here anymore? Absolutely not. All right, here, yesterday in the chat room, those of you that were with me know that we talked about it being an 85% possibility of a bounce at that point, even 90%. Got that bounce. Now you're sitting here. Now it's not even near that anymore. Now you're talking about, maybe 60% or so, and that's not worth a trade in my opinion. I would never be looking to buy it here again. Alright, this is where you wanted to buy it right down here off that moving average and try it for a bounce, and sure enough, you got from that low, you got about a 20-point bounce in the SKF. Now, another chart we looked at was the UNG. Now, the UNG was very, very interesting because they had inventories today, and it was sitting on that 200 today. The inventories came out, and it got crushed. Alright, so the UNG is very, very oversold at this point. We highlighted it yesterday. And one thing I want to point out, even though we did go through this level, if I could expand this chart, and maybe I'll go to the weekly, notice the volume surge today. Unbelievable volume in this UNG, which is the natural gas ETF. Alright, so very interesting, and this is where we start to pay very close attention for a possible bottom. Alright, on the UNG. And the reason I say that is because look at the volume compared to any other day. Over 2, close to 3 times the amount of volume today from all these other days. Alright, and that could be a very unique thing. And yes, it did come through the 20, but let's switch to the let's switch to the weekly chart on this and get a little better idea. And you can see it pierced on the weekly, the 50 moving average. Here's the 50 moving average. Now, oftentimes a 3-bar surge piercing, and this is stuff we teach in the webinar that we'll talk about more on Saturday if you take it. This can be also an indicator of a possible bottom and a little bit of a retrace on that. So that's another thing to watch. The USO as well. Notice the USO. Now, this is one we called for a bounce for yesterday, and you did get that bounce. You hit the 20 moving average on the downside, and that's a bounce signal, and sure enough, the USO was up $1.23 today, and we'll go right back to that daily chart as well to show you as well a nice bounce up on the USO today, which was expected. So the UNG was the only one that I was hoping would bounce that didn't bounce. The XLF dropped, that's what we thought. The SKF rallied, that's what we thought, and the USO did as well. In any case, folks, come join the chat room. Look for more consolidation pullback in the coming days. That would be healthy for this market. But come join the webinar this weekend. It's going to be so key that you're there. Take care. Have a wonderful day, and we'll talk to you tomorrow.